It is officially a new business week here at Metropole Television, and most certainly on a business. Thank you very much for taking your time to open your day with us. My name is Simba Elijah Charles. Can I get welcome officially to our 2-hour broadcast this morning, where we settle into business and especially what you need to know after the Easter break as we wait for markets to officially reopen today. That doesn't mean that things were actually on a standstill. I hope you did enjoy your Easter break and were actually observing the COVID-19 laid down protocols by the Ministry of Health as we try to fight this pandemic that is actually eating into the economy, because that's exactly where we start from, because now we are navigating quite a, I would say, unprecedented period that has seen the economy have to reshape and redirect itself as we actually try to understand where we are actually headed in terms of the effects of the coronavirus pandemic on the economy. While 20146, your SMS line at Metropole TVKE across all the social media platforms. Get involved. Hashtag business. I am at Kiage Simba on Twitter. Let's speak. Good. Let's therefore open into whatever it is that you're exactly waking up to this morning, and especially after coming from this break. We are talking about what has been a trend that we've already talked about here on a business time again. And I don't think it's going to be a conversation that we're going to put to rest soon, because it is relevant as it can get. We're talking about our debt, both domestic, which also compounds our public debt. Let's talk about what has been a conversation throughout the entire of this period, because last week, just before we went on a break, we did realize that IMF was extending to Kenya part of the 263 billion shillings loan that we negotiated for last year. And part of that money, actually the entire of that money, was supposed to go directly into helping the country fight the effects of the coronavirus pandemic within the country, extend more into building facilities and our capacity to actually fight the coronavirus pandemic. Kenyans are having none of that. And out of that, we've seen what has been trending throughout the entire of the Easter break, partly because of IMF, right? Let's see exactly where it is that we're coming from in terms of the IMF loans trend to the country, and that's the first point that we're going to look at this morning, and that is bound to change, because yes, it was dropping all the way from 2015 to date, and you can actually see where that trend is coming from. But then what is worrying Kenyans is that despite that drop from 2015 to 2019, what happened in 2020 is that we were actually going for more money from IMF, because if you look at where we are, then we went back to what we were in the 2016 period, because we did ask for the first 79B that they gave us actually, and then we went for the second 263. So in just 2020, we negotiated for money that would be more than what we got from 2015 to 2019, if my math is correct. Sorry, from 2015 to 2017, if my math is correct, that in 2020 we got more from IMF than we got in the first 3 years, that is from 2015 to 2017. And that's what exactly Kenyans are talking about, which also takes us to look at where Kenya's public debt is this morning, and by looking at it all the way to January of 2021, and you can actually see that it has been on a rising trend, and we did know that we officially crossed that 7 trillion mark in terms of our debt. So how are we going to pay that? Nobody's talking about that right now, because what is seemingly getting spoken about right now is exactly how we can try and save the economy from the effects of the coronavirus pandemic, but also through acquiring more debt because of the depressed collections that we're seeing the taxman go through right now. So let's talk about Kenya's external debt trend as well, which is also on a rising curve. You can also see exactly we touched the 3 trillion mark which exactly is what you have to look at again in terms of exactly how we're supposed to repay it. Question being, therefore, what are Kenyans talking about before we cross over to you this morning? And this is the first trend that you have here. Dear IMF. So we went over, Kenyans really went over and started speaking about exactly where we are. And if you look at these headlines, just a snapshot of exactly what is going on. Uhuru King in a 5 billion health scandal. Uhuru's sister firm listed in the advantage groups. Uhuru's sister, just so a lot in terms of the scandals that have gone through Kenya. And that's exactly what Kenyans are looking at and saying, we don't need more money because majority of this money is just going to be misappropriated or misused as well. Just let's sample a couple of those conversations on the first trend in terms of just go back to Dear IMF. Yes, that's the one that we're talking about, and let's sample a couple of this as well. Well, you can actually see where we are. That is a known fact that Kenya's debt has raised past the 7 trillion mark. We do know that now. Let's just go down and then we see exactly what Kenyans are talking about as well. Sign the petition. What about us? That's exactly what it is that we're talking about this morning. And we go down. And this is according to Bravin Yuri, or saying, Dear IMF, I believe that your organization doesn't endorse corruption, but lending money to the Jubilee administration, you're funding corruption. The president confessed, they actually did confess, that is not, according to Bravin, we do know that the president did confess that his government steals 2 billion shillings a day. So he keeps on saying, stop funding corruption. And he signs that by saying, yours truly, concerned Kenyan. So we keep on going downward to see exactly what Kenya is also saying about this Dear IMF. So this is it. This is according to Madam Sarah as well. It's okay. We can even look at Sam Nato or Madam Sarah. Okay. Now, if you're going to go to the ballot come 2022 to vote Mutuwetu in quotes, a big shame on you. And that Mutuwetu nonsense. That is it. They're saying, stop lending to Kenyans. Okay, that's not exactly where that trend actually ended, because from there we went to the second and again, which is exactly stop giving Kenya loans. That's the second trend that we actually got from the Easter weekend as well. This is, let's go down again and see exactly what Kenyans are talking about under this as well. Now, this is, according to Mfalme Zo, Isaiah is saying, the IMF, I take this opportunity to sign the petition, stop giving Kenya loans. Hope this finds the way to the IMF Executive Board. Stop funding corruption. Good. Now the police come knocking. Just go down again. Fantastic. That's where we are in terms of that. Kenya's really going through conversations that will support the stop giving Kenyans loans. Just sample a couple, 1 or 2 in terms of that conversation under that area as well. It's exactly what the petition that Kenyans are signing on, really going through a funny tweet about how they think that it's not us or Kenya, the IMF, this loans, it's about this guy. All right, really going through around that area. Let's move on to the second one about international, the third one actually, that was born out of that, the International Monetary Fund. All right, now, according to Barack, Kenyans have started calling out the International Monetary Fund by starting an online petition to stop the IMF from loaning Kenya the 255 billion shillings. Now, this comes a day after the IMF Executive Board approved the 2.34 billion to support Kenya's economic reform program. Now, we do know that they actually did give us that. That was an announcement from the Central Bank of Kenya that we also do expect to receive chunks or tranches of that money in the coming days, because the first one was actually approved as well. This is Kenyans really going through this petition. It's actually an existing petition online that Kenyans are signing, and they're urging you and I to sign it. So the question is, have you signed it? Just before we break off this, let's go back to that data and look at it one more time as well in terms of where our loans stand to IMF. Good. Now, if you look at that trend is exactly what we're looking at this morning, and we're going to table that conversation as well this week in terms of the trend of loans to Kenya. The interesting thing is that as from 2016 all the way to 2019, yes, they were dropping, but as from 2020, we've seen that over-reliance on IMF loans to the country as well, which therefore makes us again jump to the next data set in terms of Kenya's public debt, again, which you're going to see we've officially now crossed that 7 trillion mark. And with these loans that are coming in, we are going to jump quick enough beyond that 7 trillion. And Kenya's external debt, which is also above those numbers of 3 trillion, as we don't know of it right now. That's exactly what is sort of enraging Kenyans online and saying, well, we don't see where this money is getting applied. Do you think that IMF should stop giving Kenyans loans? And if not, then where do we get this money from? 20146, your SMS line at Metropole TVKE across all your social media platforms. Should IMF stop giving Kenyans loans? Good. All right, now let's talk about another issue that you're waking up to this morning, because now we do know also that the president did sort of close partly the economy. Now we do know that we have more stricter or stringent rules guiding the COVID-19 containment measures, and one of those is the total closure of learning institutions. Anybody who's in school right now, you're either a candidate or you are part of that essential service within that institution. Which therefore begs the question of what happens to the learning calendar as we do all of it, because now there are fears that we are actually not getting out of this third wave of the coronavirus pandemic, because these are the numbers we're getting from the last 24 hours. Now remember, we are navigating the second closure of the economy, because now what we do know is that after closing, now we have 460 cases in the last 24 hours out of 2,753 samples are tested, that translating to a positivity rate of 16%. Look at that. We're still in the double digits positivity rate. And remember, the reopening of schools was supposed to be happening in May, and we're really closing down towards that reopening date, meaning that we have to figure out new learning calendars again for the education system within the country, because it was disrupted and was supposed to take us all the way to 2022 for us to correct it. But if these numbers are anything to go by, we are looking at more closures of these learning institutions, which therefore means that even the completion of third term, which was supposed to end in the first 3 months after the reopening of May, is that we have to figure again on exactly when the schools are going to reopen, if this positivity rate is anything to go by. And that's not the only way in which we're looking at that, because we also have 20 fatalities in the last 24 hours, with also the IMF saying that, with the Ministry of Health saying that, well, these deaths also are a factor of the other deaths that have occurred within the month that are now just getting grown right now. That's the only way they're looking at it as well, because now we do know, because of this positivity rate and Kenya being in the third wave of the coronavirus pandemic, we've sort of gotten into what is seen as a diplomatic tiff between Kenya and the UK. Now we do know last week the UK did announce that anybody who's coming in from Kenya would have to wait for 10 days to actually move freely within the UK. Fine, Kenya came back and said, well, look, because of that, anybody who was from the UK and coming into the country would also have to self-isolate at their own cost in identified facilities across the country for 14 days. Good. The UK came back and said, okay, so that is it. They cancelled flights from Kenya to the UK. And what we do know is that that has been quite a profitable route for KQ. All right, so what happens to KQ? KQ actually did announce that as from April 9th, there's not going to be any flight from Kenya to the UK. Wow. Okay, so let's look at what that effect is going to have on KQ, which we do know has been also mulling profit losses, 36.2 billion, just to be exact. All right, let's cross over and see what KQ performance indicators have been for the half year of 2020, and what is going to stand there according to Reuters, that data is the profitability trend, which you're seeing is on the negative. Now that's jumping, if you look at the next data set, to 36.2 billion, which is the biggest loss in corporate Kenya, with the CEO Alan Kilavuka saying that, well, the airline needs some sort of bailout, and they actually stated the figure 55 billion to be exact. And he said that if you don't get this money, then the airline is bound to run out of finances in the next 9 months. So what's going to happen again to the loss trend for KQ if you're going to cancel what has been one of the most profitable routes for the national airline? Those are questions that we're going to answer as we go by this week on what that diplomatic tiff between Kenya and the UK, with UK saying, well, if any country is within the third wave, then we have to take stricter measures in terms of protecting our borders from further infections and causing more disruptions, as we have seen that in the UK as well. Now, this morning and for the entire of this week, we are going to digest what has been corporate Kenya giving us results, and we're calling them, well, COVID-19 results. But let me talk about the most exposed industries, especially the banking industry. What we have seen is described as, number one, increased loan loss provisions, dividend cancellations, and reduced profitability out of those loan loss provisions. But then one bank is standing out. It stood out in the half-year results in 2020, and they stood out again when they released their final results for the year ended December 2020. Family Bank, and you can actually see that in terms of their profitability, they've continued to really mark good results within the economy. That's exactly what it is that we're going to talk about this morning. The case study, Family Bank. What are they doing properly within the coronavirus pandemic? Because if these results are anything to go by, then they deserve a talking point. Okay, let's look at exactly what the major talking points really are in terms of a Family Bank results. Now, under that, you will see that the net interest income grew by 1.4 billion to 6.4 billion, which is compared to 5 billion that they experienced in 2019. Now, if you look at the profitability trend, you will say it jumped 22.4%. Now, that's where the conversation point is, to end at that 1.1 billion in 2020. But yes, they also went through a bigger loan loss provisions that grew 2.5 times from the 734 million in 2019 to 1.62 billion in 2020. Interesting, really, a conversation point that we're going to lay this morning as we look at the performance trend for the banking industry in 2020 as we forecast what is it really going to be in 2021, because we do know we're still navigating the effects of the coronavirus pandemic. We're not out of it, despite the optimism that we're sharing that things are going to get better as we go by in 2021. BAT, they seem to have also agreed with the government on exactly what structure the marketing for the nicotine pouches is going to follow. All right, let's talk about that as well this morning. But just looking exactly what were the performance indicators for BAT, and we're going back to what there was the half-year results in 2020 as well. We do know that the ones who were actually the outstanding performers during that period, seemingly they have agreed that they're going to market their nicotine pouches under the nicotine, let me just go back and tell you exactly what it is. They're going to market them under the Tobacco Control Act of 2007, which will mean that the nicotine pouches are going to be sold to only adults, and the bear graphic images like the cigarettes now we do know in the country under that act. And also in terms of advertising, they're not going to be advertised. Seemingly, BAT has come to terms with what has been a tough stance from the Ministry of Health in terms of how they regard the nicotine pouches, because we do know that this second review was actually overturned by the CAS, Ministry of Health, Mutahi Kagwe, that saw BAT have to wait and renegotiate behind closed doors on having the nicotine pouches considered as non-tobacco. Fantastic. Let's talk about what has been the heavy impact of the coronavirus pandemic on the biggest blue chip companies in the country. That means I have to take you back to exactly how we started trading again this year. Richie, if you can actually jump to what was the NSE share trend, BAT, Safaricom, EABL this morning, so we can actually also look at what it was. If you look at that, they started the year really good up to February 21st, 23rd, and all the way up to March. Those were the leaders really, because they represent exactly what the strongest stocks in the country are. And we spoke and said, well, this could be somewhat an indication that things are going to get better. It didn't really indicate that, because upon the closure of the economy again by President Uhuru Kenyatta, and what most analysts say, well, it lacked an economic package, the market is actually showing that, because all the way from when the president closed the economy without an economic package, the market capitalization has dropped by 89.38 billion, which is the biggest drop that we've seen since the start of the year, which takes us all the way back to 2020 when we got into the coronavirus pandemic, because we closed Thursday at 2.468 trillion, which is also the biggest drop since last year as well. Now, those stocks that I've shown you there, Safaricom, EABL, and the banking quotas are the ones that have led to that drop. And analysts are saying that this could be a market reaction from investors saying, well, there is no economic package that has been extended by the president to the economy, which is exactly what is making this reaction from investors in our local market. That's where we are. That's exactly how we opened this morning. Welcome to a brand new week here at a Metropole Television's Business AM. Get involved 20146 at Kiagasimba is my underscore. This morning we look at the banking industry. How have we fared during the coronavirus pandemic? Talk matters regulation, talk matters forecasting on exactly how it's going to look as from 2021. Our 2 hours should begin right now.